Good morning. This is Horizons Middle East and Africa, our top stories this morning. Presidents Trump and Xi wrap up their pivotal trade meeting in South Korea. It began with Trump calling his Chinese counterpart a very tough negotiator, but also a great leader, while Xi says he's ready to continue working with the U.S.
President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Treasury yields rise and the dollar drops after Fed Chair Jerome Powell warns that a December rate cut is not guaranteed.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates, 7 a.m. over here in Saudi Arabia, our fourth show in Riyadh this week. I'm Jemana Bersachi. And the big news of the day, Presidents Trump and Xi have been meeting. And we are just going to show you some images in a moment of President Trump's motorcade. There you can see him walking away from the meeting that just took place with his Chinese counterpart. And we have been waiting in anticipation of this very, very high-level meeting between the two leaders for months now. As you can see, he's just walking out. We've yet to get a readout of what actually took place between the two sides and whether they were able to reach some form of, number one, a truce, but actually a more long-term trade deal, especially when it comes to some of the key issues there, including concerns around national security, around fentanyl, around China's purchases of soybeans, in addition to technology transfers as well, and the access that China will get to some of those key chips. Remember, a couple of days ago, President Trump floated the possibility of letting NVIDIA have the capability to sell their Blackwell chip into China as well. So all of those things on the table. And also, don't forget, keeping a close eye on the energy complex too. And maybe we get some flashes or headlines about whether there was any discussion vis-a-vis Chinese purchases of Russian oil, which has been a key focus of the Trump administration over the last couple of weeks as well, ever since they applied those sanctions onto the Russian companies. So here you have President Trump quite literally walking on the red carpet, saying goodbye to everybody, being escorted on what appears to be Air Force One to make his way back. And this rounds up a series of meetings that he's been having around Asia the last couple of days. This all kicked off almost a week ago, and he made that pit stop in Qatar before making his way on to Malaysia, and he was there for the ASEAN summit there, proceeded on to South Korea, then on to Japan as well. Well, first Japan, and then on to South Korea, and then the grand finale coming with his meeting, a very high-stakes meeting that has taken place with President Xi, and still waiting to get a full readout of what has taken place between the two leaders. Certainly, though, the markets are reacting as though this has been quite a positive development. And the fact that the two leaders are even talking to each other shows a significant amount of improvement in the relationship versus where we were, say, back in the beginning of the year. And there you have it, President Trump with his signature fist bump, saying goodbye, boarding Air Force One, and will be departing. So he is leaving South Korea right now. Okay, let's move on and take a look at markets. So that was the big news of the morning. What about the big news of yesterday? We had the Fed, and guess what? They actually did disappoint somewhat. It was a hawkish cut. It was not what the market was looking for. And yet what we did see is S&P ending the day pretty much flattish. Today we've got futures leaning towards positive, up 0.3%. Big focus on some of those tech names, the likes of Meta, falling 7% yesterday in trading. Huge capex spend forecast over there, and perhaps spooked the market a little bit. But Alphabet jumped almost 7%, Microsoft falling 4%. So a bit of a mixed bag, but essentially some of the reaction to those tech stocks has been a little bit negative overnight. Two-year yield sitting at 3.58, and what we did see was a big retracement yesterday after the Fed meeting. The front end of the yield curve moved up about 8 basis points, and bear in mind that that is not the only central bank meeting. We had the Bank of Japan as well, no change there, though we did have, again, a split vote. Markets are eagerly looking out for the press conference to see if there's any clues for hikes. And we have the ECB coming up later today. And then finally, we have Brent trading just shy of $65 here, basically flat on the session. We have OPEC Plus meeting coming up this weekend. It's really busy, everybody. Okay. Let's get back to our top story, which was that really high-stakes meeting that took place at the negotiations in Busan, South Korea, between Presidents Trump and Xi have just wrapped up with a handshake between the two leaders. Now, ahead of the meeting, the leaders of the world's two largest economies struck a cordial tone before they sat down to hammer out the details of a trade framework that was negotiated over the weekend in Malaysia.
We will be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now. But President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Our joint guidance, China-US relations have remained stable on the whole. Given our different national conditions, we do not always see eye to eye with each other. And it is normal for the two leading economies of the world to have frictions now and then.
Let's go live to Busan now, and our chief North Asia correspondent, Stephen Engel. Well, quite the imagery that we just had now a little while ago with the two presidents shaking hands. Certainly an air of more cordiality coming through, Stephen. But what do we know about the details of the meeting?
Well, we don't know the details and the results of their meeting other than they met for an hour and 40 minutes behind closed doors, which is a healthy amount of time. Some said it could have been upwards of 3 hours. I don't want to read too much into that, but we do know that they wrapped things up because Xi Jinping's Hongqi limousine, red flag limousine, just drove past us as you were opening your show, and there are a bunch of, dare I say, bust-in supporters of Chinese flag-waving supporters along the route here. So we did know, we got the strong hint that he was going to drive past here, as he's really just joined or arrived in South Korea today. We also just saw Donald Trump go up the steps of Air Force One. So he is wrapping up his trip to South Korea and will fly likely back to Washington, D.C. Directly. Was it a success? Well, the fact that they met and the fact that they said nice things to each other beforehand is a good preamble to what is going to be the eventual readouts. What we didn't get is we didn't get sort of comments from the two of them before they departed in their own directions. So we don't know how successful necessarily these discussions were, but the issues were pretty much agreed to, and the results were pretty much agreed to over this past weekend in Malaysia in a fifth round of trade talks between the two delegations led by Scott Bessent, the Treasury Secretary in the U.S., and Vice Premier He Lifeng from the Chinese, who were also at that table this morning.
Yeah, and Stephen, I guess it's safe to say at this point that those extra 100% tariffs that Trump floated a couple of weeks ago are not going to happen. So maybe from the investor's perspective, the market's perspective, the worst is truly behind us now.
Well, I think this sends a positive signal to businesses who need to be able to plan forward planning, and of course, the threat of 100% additional tariffs on Chinese goods to the United States is a great uncertainty. So I think there's a pause right now on that additional threat. We don't know how long the pause will be because the fundamental issues, the competitive issues between China and the United States are still there. And clearly, as evidenced by Donald Trump's trip to Japan and his meetings with Tachikawa, the new prime minister, they're trying to get in coordination with how to sort of wean themselves off reliance on China for things like the critical minerals and batteries and rare earths. And clearly there's moves afoot to do that. So this is a truce. This is going to be a prolonged truce, most likely, unless things went really pear-shaped behind closed doors that we don't know about yet. But clearly these two gentlemen said the right things. Xi Jinping said it's inevitable and I'm paraphrasing, it's inevitable when you have the world's two biggest economies, the world's two biggest superpowers. They're going to have friction from time to time, but they have to have dialogue and communication. And despite the conventional wisdom is that they haven't talked much, he said they've had 3 phone calls, they've written each other letters, and they've stayed in fairly constant contact.
Stephen, thank you so much. That was Stephen Engel in Busan. Okay, well, given the more positive tone that's come out of this meeting, let's check in on the reaction in markets in Asia and how they're doing with all of this news. Winnie Su in Hong Kong, run us through it.
Morning, Jemana. So it is truly a very dynamic and very busy day for Asian markets. You can see on the screen that the MSCI Asia is right now quite flat. It's fluctuating throughout the day. And for now, there are a lot of things going on. You mentioned that how we're wrapping up with that meeting between President Trump and Xi. And we're waiting for more details to come. And also, as investors brush off that cautious tone from the Fed and shifting their focus to that renewed optimism around AI, you see the Kospi here being supported a bit, and that's driven by how Samsung also had a beat when it comes to their quarterly earnings. The Nikkei here actually trading slightly down right now. It was up a bit just now, and the yen actually also fluctuating. We just had the Bank of Japan say that they are keeping rates steady right now, but still we don't have a very clear direction around when that next hike would be, and the attention right now is turning towards the Bank of Japan's press briefer in just a few hours. So keep an eye on that. Now we flip the board and take a look at what Chinese market is doing, because like you said, that big story right now is around the meeting between Trump and Xi, which just wrapped up. So you can see still quite some upside here compared to the overall benchmark. The stocks in Hong Kong and in China slightly towards the upside, and we are seeing a bit of a strength when it comes to the offshore yuan. However, it is still remain uncertain right now what that eventual readout is. So we'll be waiting for that as well.
Yeah, Winnie, thank you so much for running us through it. Well, at the top of the show, we had some also breaking news coming through, earnings from Standard Chartered. Let me bring those to you. Third quarter adjusted pre-tax profit has come in at $1.99 billion versus estimates of $1.79 billion. Let me get you the operating income as well. The third quarter adjusted operating income at $5.15 billion versus estimates of $5.03 billion. So it beats on the top line, the bottom line. In terms of a return on tangible equity, they're giving some guidance. It's now expected to be around 13% in 2025. And they plan to return at least $8 billion to holders between 2024 and 2026. So what we're getting is a little bit of commentary around the distributions that shareholders can expect. Operating expenses, always key for banks, i.e. costs, to be below $12.3 billion in 2026. A positive income to cost jaws in each year at currency, i.e. revenue is growing faster than costs are growing. And then for this third quarter, we spoke about return on tangible equity coming at 13.4%. So for the full year, it's now expected to come at 13%. In terms of underlying loans, see low single-digit percentage growth in underlying loans. But bottom line here, what we got from Standard Chartered, a beat on top line and on bottom line. Okay, up next, plenty for markets to digest today with trade talks, back-to-back central bank decisions, and major earnings reports to parse through. We'll hear from Macrovisor's Ayesha Tariq. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Riyadh. Now, markets are taking a cue not just from the meeting between Trump and Xi, but also from the comments by Fed Chair Jay Powell after they cut interest rates by 25 basis points.
At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75% to 4%. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. If you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. There were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
And it's not just the Fed. We also just got the Bank of Japan. They decided to hold rates steady. And the ECB are expected to hold rates later. So no shortage of central banks to discuss today. Joining us is Ayesha Tariq, Macrovisor co-founder. Good morning to you, Ayesha. Let's start with the Fed. We got a hawkish cut, and the markets were quick to reprice the trajectory for December. Only about 17 basis points priced in now in terms of a cut. Do you believe December is still live after hearing what the chair said yesterday at the press conference?
Good morning, Jumana. Thank you for having me back. So, yes, I think the meeting is still live, but we may not get that third cut. Now, let's go back a little bit to the September meeting, because I think that kind of gave us an idea of what we could expect. Now, if you remember the dot plot, the dispersion was very interesting. It was 10 for lower rates, so 3 more cuts, and then 9 against, right? With outliers saying that they didn't want any cuts at all. So I think the market celebrated a little too early. And then we were getting CPI numbers that were relatively cooler. And finally, I think the Fed themselves were actually focusing more on the labor market versus the inflation story. Now, yesterday, we saw a little bit of a turnaround in that, not just in Fed Chair Powell's speech, but also in the Fed tracker itself. So basically what the Fed posts officially, right? And they did talk about upside risks to inflation. And the other thing I wanted to point out was Powell has always been talking about a one-time increase in inflation because of tariffs. And yesterday he kind of said, well, the one-time increase could be more persistent and we need to take care of that. So it looks like their focus is shifting a little bit. And so we may actually not get the third cut in December.
Interesting. Yeah, so the nuance is shifting a little bit. Before we ask about the ramifications of that, let me also ask you about how much you think this decision was influenced by the fact that there has not been much data that's been published. They don't have a lot of public data to contend with.
So I think it's quite a lot of influence. And I think if you listened to the press conference, what would come across to you was Fed Chair Powell very subtly telling us that this data void has not been good for their decision making, and that we shouldn't be too optimistic if there continues to be this data void.
Yeah. When you look at the market reaction, what we saw yesterday is S&P essentially shrugged it off by the end of the day. But of course, you did have that move in bonds, the front end of the curve repricing, the path forwards, 10-year yields also shut up as well. Would you say that looking ahead, the impact of the Fed perhaps turning slightly less dovish and maybe leaning more towards the hawkish side of the spectrum will have more of an influence on bond markets than on equity markets?
So that's almost always the case. Now, where the equity markets are concerned, we're not just looking at the easing of the Fed. So the easing of the Fed, I would say, is more weighing on the rest of the equity market versus big tech. But big tech still very much remains the central story to the U.S. stock market right now, right? And because of that, I think, we've got this little bit of a disparity on how news is parsed by the equity markets.
Yeah. Speaking of equity markets, let's talk about one of the other big elephants in the room that's been hanging over global markets for months now, and the détente between China and the U.S. I don't know if you heard me speaking to Stephen Engel, our correspondent, but my reaction to this is perhaps the worst really is behind us when it comes to U.S. and China relations. Do you think that that is going to be the market takeaway as well?
So, Jumana, I like to say never, right? And where the U.S. and China is, concerned, we've continued to see surprises. I'm hoping that you're right, honestly, but even this last, I want to say, spat that we saw of 100% tariffs from November 1st, it wasn't expected, right? It just came out of nowhere. So while, relationships are getting more cordial, I would say, anything could happen between now and actually signing an agreement. Anything could happen even after signing an agreement. So yes, the markets are celebrating already. We can see the pullback in gold, and we can see, some of the optimism in equities. But, this still remains a fluid situation, and there's a lot to work out between, the two countries.
Yeah, and yet I see from your research that you're long U.S. small caps, you're long China tech on pullbacks. So you're synthesizing everything that we discussed together. You're still pretty bullish on equities here.
I am bullish on equities because I think that we could see some healthy correction, and I would welcome that actually to buy the dips. But overall, I think the story still remains intact. Yes, the economy, the U.S. economy particularly, is in stagflation, but that doesn't pose a massive risk to equities right now. And the Fed still is on an easing path, right?
Ayesha, thank you so much. Always a pleasure to chat to you. Ayesha Tariq, Macrovisor co-founder. Thank you so much. Well, coming up, Namibia repays its $750 million eurobond, the largest single-day debt maturity in the Southwest African nation's history. Details later in the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. Now, OpenAI is reportedly aiming to go public by 2027, with an IPO filing planned by the second half of next year. Reuters saying the offer could raise at least $60 billion and value the company at up to $1 trillion. OpenAI has just completed a restructuring into a for-profit business, signing a new pact with Microsoft and making concessions to regulators. Boeing has taken an almost $5 billion charge and delayed the debut of its 777X jet. That's as the U.S. planemaker reported a wider third-quarter loss than analysts had estimated. Shares tumbled the most since July. The latest write-down means Boeing has now recorded nearly $16 billion in charges on the 777X, which is running 7 years behind schedule amid tough regulatory scrutiny. Okay, let's get a quick check on markets. Digesting all of the news as it come out, the meeting between Presidents Trump and Xi, more conciliatory tone. We had a negative result from, the reaction in the market was negative from some of the big mega cap that reported overnight. Meta leading with the declines, and Microsoft too. And then, of course, we had the hawkish cut out of the Fed as well. So today, futures leaning towards negative across the board, down 0.2%. Coming up, we hear from Saudi Arabia's Economy Minister Faisal Alibrahim on the kingdom's diversification efforts. Next, this is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Presidents Trump and Xi wrap up their pivotal trade meeting in South Korea. It began with Trump calling his Chinese counterpart a very tough negotiator, but also a great leader, while Xi says he's ready to continue working with the U.S.
President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Treasury yields rise and the dollar drops after Fed Chair Jerome Powell warns that a December rate cut is not guaranteed.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
It's just gone 8:30 a.m. across the Emirates. At 7:30 a.m. over here in Saudi Arabia. I'm Joanna Versace in Riyadh. So December is not a foregone conclusion. Far from it is what Fed Chair Jerome Powell was saying yesterday. They delivered on the cuts, but did not commit to December. So what was the reaction Actually, not a lot for equities. S&P ending the day flattish and NASDAQ actually slightly higher. This morning, we are pulling back, though, as you can see the screen, a bit more red with the S&P futures down about 0.2%, NASDAQ down 0.3%. But also bear in mind that we had some earnings come through and markets seem to be a little bit spooked out by the size of the capex numbers, those spend figures coming through from Meta. That stock down 7.4% at one point in extended trading. Microsoft down 4%. And then Alphabet jumping almost 7%. So a bit of a mixed bag out of those three key names in the Magnificent Seven. And then on top of all of that, you had this meeting that took place between President Trump and President Xi. The tone seems to be quite positive, though we don't have a readout yet of what exactly was discussed and what was agreed to in terms of a potential trade deal framework. Two-year yields, you can see back at 3.57. We shifted upwards about 8 basis points yesterday after that Fed meeting came through. So December is about 17 basis points priced in now for a cut. And then Brent sitting shy of $65 here, 64.7, slightly weaker. Remember, we have another OPEC Plus meeting coming up this weekend where they are anticipated to once again introduce extra production back to the market. 137,000 barrels is the baseline, but will they surprise with even more given some of the constraints that are likely to come through on that Russian oil supply? So that's one of the big questions for energy markets as we head into the weekend. Okay, let's check in on how markets in Asia are faring as well with Winnie Su in Hong Kong.
Yeah, morning, Jomana. We are seeing a bit of a weakness when it comes to the Asian markets. It was up slightly more earlier in the day, but as we wrap up with that meeting between Trump and Xi, we are hearing that investors slightly more disappointed at the fact that there wasn't a readout to come right away. Now, take a look at what's going on. Otherwise, in the Korean market, slightly up, pairing earlier gains, but we did have that positive earnings results from Samsung. So it is renewing a bit of an optimism when it comes to the AI space. And when it comes to Japanese market, we just had Bank of Japan keeping its rate steady, but we don't have a clear direction in terms of when that next rate hike is going to happen. And hence, all eyes are still on the Bank of Japan's presser later in the afternoon. So a bit of a strength still in the topics, but overall fluctuating quite a bit. Now we flip the board and take a look at what's going on in the Chinese market, because that big story is still that Trump and Xi meeting that just wrapped up. So here you are still seeing a bit of an upside in the Hong Kong shares, and also slightly less, but still in the green are the onshore stocks. Now that is again coming off that positive tone that we saw between the two leaders in the U.S. and in China. But we are still waiting to hear more details in terms of what kind of trade deal and what kind of agreement they've decided on. Back to you, Jomana.
Most definitely. Winnie Su, thank you so much. Winnie Su in Hong Kong. Now, Saudi Arabia's economy minister says Vision 2030 aims to reduce dependence on oil and government spending by fostering private sector innovation, particularly in artificial intelligence, healthcare and defense. Speaking on the sidelines of FII, Faisal Alibrahim told me some mega project targets have been achieved well ahead of schedule.
As you know, Vision 2030 has been put in place to get us less reliant on a single commodity price, less reliant on how big the government budget is, and more reliant on private sector dynamism and productivity, on innovation. Technology plays a big role. We have priority sectors: healthcare, energy, technology in defense, but also artificial intelligence and general technology. That's very important for the kingdom's transformation. And in addition to that, plans are put to achieve certain outcomes. If with time the agility muscle tells us that there's room to improve the outcomes, plans can change. We're still steadfast in all of our projects that we have announced. Some have been deprioritized, some have been, schedule has changed, primarily because the reason they were put there have already been achieved. Tourism, culture, entertainment, and sports, these are sectors that required anchor projects that we announced that are starting to deliver today. Tourism is giving us the numbers we wanted. We had targets in 2030 achieved 7 years in advance. And as such, because of that and because of the private sector participation in these new sectors, there was room for wiser use of our capital towards doubling down on technology, especially as AI started evolving recently.
Let me just ask you about the sort of right sizing or reprioritization of some of those mega projects. Are we going to get more color on what the priorities are? Which are the projects that you're prioritizing?
So every sector has its own objectives. These projects have been mapped towards the objectives and the priorities of the sectors. We mentioned these 4 sectors. If you look at Riyadh alone, very soon, in a matter of months, weeks, you'll see that Six Flags will open in the entertainment city of Qiddiya. This is a large entertainment city. Six Flags is going to be one of the smallest components in it, and it will open at the end of December. A water park will open a few days later, soft opening, and then in the summer the plan for now is to have the grand opening. And then more projects there. If you look at the Red Sea, 5 resorts followed by 11 resorts already open to the public and coming online. If you look at Dir'iyah, also to the west of Riyadh, you look at Ula, these are all mega projects that are in delivery and some have been delivered. So it depends on what each sector wants from these projects and how it will contribute.
Yeah.
But there's pretty good momentum in all these 4 sectors.
Okay, so one of the concerns that the analyst community has looking out and projecting growth in Saudi Arabia is that this sort of reprioritization of projects is actually going to lead to a slowdown in growth of some sorts that's going to have an impact on the non-oil part of the economy as well. Do you have any projections as to how that right sizing could impact GDP in future years?
So one of the most important things is that in our budget process, in our continuous planning process, we have multiple scenarios that make sure that we are ready for whatever scenario that plays out. Our forecast for 2025 and 2026, total economic activity, total GDP, is between 4.8 and 5.1 for 2025 and 6.5 for 2026. Non-oil is 3.8, and for 26 is 3.6. That's healthy, sustainable, continuous growth, especially in the non-oil sector. Keep in mind, the non-oil activities today represents 56% of the total real GDP. So higher than government activities on their own, higher than oil activities on their own, and higher than both of them combined for the first time in our history. It used to be 46%, now it's 56%. On top of that, the reliance of the total economy on the oil sector has dropped from 90%, a little north of that, at 2015, towards 68% at 2024, and the plan is to take it even further down.
Well, that was Saudi Arabian Economy Minister Faisal Alibrahim speaking to me yesterday. But let me just bring you some lines that are coming through now from President Trump. He's on Air Force One. He has just wrapped up that meeting with President Xi's seminal meeting, of course. And the first thing that he said was that the meeting with Xi was, quote, amazing and outstanding. He said they had an agreement on so many elements that China will agree to immediately start buying soybeans again. The other big headline that we just got out of President Trump is that they will reduce fentanyl tariffs to 10% effective immediately. So this is, again, one of the key points of contention between the two sides. But now we know that there's some agreement on fentanyl side of things. So the tariffs there to be reduced to 10%. But then also, remember, NVIDIA was one of the topics of the conversation that came up earlier in the week. And he says, we're not talking about Blackwell. Trump says China will talk to NVIDIA on chips. China will be discussing these chips with NVIDIA. So not really giving a lot of guidance as to whether the full go-ahead or the green light has been given to NVIDIA to sell those AI accelerator chips into China. So that is an interesting headline coming through. And then, of course, rare earths, the #1 topic that we've been talking about again the last couple of weeks, and what really set him off a couple of weeks ago. He says all of the rare earths have been settled. So he seems to be satisfied with the discussions that took place on rare earths. He's saying there is no roadblock on rare earths as well. And then he says, think pretty soon to sign a trade deal with China. And he says, we have a deal, so pretty soon they will be signing a trade deal with China. These are comments that are coming through from President Trump. He is speaking to reporters on Air Force One. So plenty of positive headlines coming through. The key takeaway here is that they seem to have an agreement on rare earths, on soybeans, and also on fentanyl tariffs as well. Okay, let's go back to what we were talking about vis-a-vis Saudi Arabia, and we'll pick up the conversation with Aathira Prasad, Macroeconomics Director at Nasser Saidi and Associates. You heard my interview there with His Excellency Faisal Alibrahim. I thought it was interesting. Also, yesterday we heard from the PIF governor, Mr. Umayyan, and he was saying that they're going to focus on building ecosystems ahead in 6 key areas, including travel, tourism, entertainment, urban development, livability, advanced manufacturing, innovation. Do you see this as sort of a maturation of Saudi 2030 vision, or a bit of a pivot in terms of what Saudi Arabia is really focusing on as what is going to be driving growth in the coming years?
I think for Saudi Arabia, all the comments that have been coming through, it's basically reaffirming their diversification story. The bottom line remains that the plans to diversify away from oil is ongoing. Whatever signals that we are getting is that they are looking at it in terms of a reset rather than a retreat away from the projects that had been previously announced. So if you look at the sectors that the PIF has pointed to, they are the main driving force in terms of non-oil growth. You've had tourism, and all the other sectors that have been laid out are the ones that have been up and coming in terms of the projects being announced, new companies being formed, and so on. So it is a step in the direction. They're identifying their strengths and then putting the investments towards those sectors so that you can drive the non-oil sector growth a bit higher than what it is now. So all in all the news that is coming out in FIA is quite positive.
Yeah. So another one of the comments from one of the key ministers earlier this week also caught my attention, the Saudi Investment Minister, His Excellency Khalid Al-Faleh, and he sort of said it's time for there to be more private sector participation. And I just wonder, from an economist perspective, was there some sort of a crowding out effect because of the huge role that the public entities have played in spurring investment in Saudi Arabia?
Well, in the past, at least few quarters, we've seen PIF take a significant role in terms of domestic spending. So I think what the minister is referring to is that there will be a gradual movement towards increased participation from the private sector, as it should be. I mean, there have been quite a few successful public-private partnership projects that have been undertaken in Saudi. We have seen in the past that the private sector contribution to GDP has been increasing. I think what they are looking for is more participation from the private sector, perhaps to start with, along with the government, before they take it forward as the private sector investment alone. Right now, if you're looking at things, there are still a lot of infrastructure projects that the private sector may not be fully on board to put in funds fully, as in 100% private sector, but it could be a gradual process. We're seeing that in the power sector, for example, where you've had projects where it's joined with the government and the private sector, a build, operate, and then transfer kind of model. Those could be, moved along into other sectors as well. And if they turn out to be successful, the private sector would be more keen into putting more and more funds into the sector. There are quite a few sectors that you can start off with. You have health, you have education, transportation, and so on. So it could be small steps leading up to bigger investments by the private sector going forward.
Aathira, thank you so much for joining us today. Aathira Prasad, Macroeconomics Director at Nasser Saidi and Associates. Well, I'm going to bring you another line, breaking news, coming through from President Trump. Guess what? He's saying he'll go to China in April, so mark your calendars for next year. He's now announcing to everybody that they've agreed in that meeting, that bilateral meeting that took place, that he will be going to China in person in April next year. More and more lines coming through thick and fast. And remember, he said that it was an outstanding and amazing meeting. That's a quote between the two sides. He says that they have agreed for China to immediately start buying soybeans, so to start ramping up their soybean purchases. They've also come to an agreement on fentanyl tariffs. They're going to reduce those to 10%. They had an agreement on rare earths. He seems to be satisfied, but he did say, we're not talking about NVIDIA's Blackwell. And then he also said, and this is interesting from the geopolitical side of things, Taiwan never came up. So that was not mentioned at all. So interesting point there. And then on Ukraine, he says that they talked about Ukraine for a really long time. And listen to this, also relevant for anyone who's watching the energy markets, they did not discuss oil. So there you go. One of the points that has come up in the run-up to all of this is that China, as we know, continues with their purchases of Russian oil. Trump is saying they did not discuss oil today, but they are going to work together on Ukraine. He continues to say we had a long meeting, a lot of things we brought to finalization. But ultimately, one of the big headlines here also is that he plans on going to China in April. It seems like a reporter asked him about Israel and Gaza as well, and he says we are back to the ceasefire. That's probably unrelated to the conversation that he had with President Xi. He is taking questions from reporters. There has been an intensification once again of strikes on Gaza, and President Trump reiterating here, saying we are back to the ceasefire. So there we go. Some real headlines coming through from the President Trump meeting with Xi. President Trump has been speaking to reporters. The takeaway, if you're just joining us, was that it was, quote, an amazing and outstanding meeting, per the language used by President Trump. All right, coming up, Namibia repays its $750 million Eurobond, the largest single-day debt maturity in the Southwest African nation's history. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Well, we just came back from a break, but President Trump did not take a break. He's still speaking to reporters on board Air Force One. I was just breaking you some of the key headlines before we went to break, but I do want to bring you some other ones as well. In that he says China will invest in the U.S. Remember, that's become a key component of some of the trade deals that U.S. has been inking around the world, but he didn't give a figure, so we don't have a number here. And then another line on North Korea, he says, I was not able to talk to North Korea's Kim. I was too busy. So there was nothing on the North Korea front. But he also says we had a very nice conversation with Carney. Maybe somebody asked him about the recent Canada developments and what's been going on there as well. It looks like he has ended his remarks now on Air Force One. The takeaway, of course, that they had a good meeting and he's heading to China in April. So positive for markets. Now, Namibia has repaid its $750 million Eurobond, the largest single-day debt maturity in the Southwest African nation's history. Finance Minister Ayesha Tariq says the redemption will enhance Namibia's creditworthiness and standing in global capital markets. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Jen, what more of the details do we know about this?
Right, Jumana, this was something that we have been anticipating for quite a few months. We heard the finance minister sort of allude to this a few months back, but now that this has officially happened, significant for this country. You mentioned there that $750 million bond. It was actually used, there was actually a sinking fund that was used to pay it back, and it was $444 million that was used to pay that back. And this is really significant. Let's just take a look at what we've seen from this economy over the past few years. Their foreign direct investment has declined. They've been facing a lot of difficulties in terms of macroeconomic stability. And when we heard from the finance minister, they said the redemption will enhance our creditworthiness and positions us favorably to potential future engagements in the global capital markets if circumstances warrant, which you were just alluding to there. And the significance also is the fact that it was a focus for them to tap to the domestic markets as opposed to the international markets because of their own standing and their own deterioration in creditworthiness over the past few years. So now that they have this off the table, there are a number of investments that they're prioritizing and projects that they're hoping they can get off the ground. And again, hopefully this sends a signal to international investors that they are a creditworthy borrower. But analysts do say that if they aren't able to actually make that commitment, it could be difficulty in terms of their long-term economic development agenda. So very significant and positive news for Namibia there.
Yeah. And in terms of attracting FDI, a focus of Namibia, how is the country faring right now?
This has been a priority for President Ndaitiwa since she assumed power earlier this year. Even the few times I've heard her speak, she likes to reiterate the fact that this country is quite powerful in terms of the resources that they have. They're hoping to be a dominant player in terms of green hydrogen production. They also are the world's third biggest uranium producer. And also we're seeing a number of companies from BP to Total that are continuing to invest in this economy because of their offshore oil discoveries. And so a lot of this is positive for her, and she likes to tout the resources that they do have, because over the past few years we've seen decline in FDI, as I was mentioning there. Last year was actually a 25% decline for the country. So there's quite a lot to make up for Namibia, but they're hoping that some of these contracts will help not only bolster some of the sentiment in terms of investment into the economy, but also help them diversify away from some of the individual sectors that they were focused on before. And if we just finish on what we've heard from the IMF, they're actually expecting growth to hit 3.3% in 2025. That is a bit of a slowdown from what we saw in 2024, but still there's quite a bit of post-pandemic recovery that Namibia needs to still make up for in the years ahead.
Jennifer Zabazaja, our Chief Africa Correspondent in Johannesburg, thank you for the latest, sir. Now, the CEO of AI chip startup Groq has compared Saudi Arabia's ambitions in the technology space to its oil legacy, saying humane is to AI what Aramco is to oil. Jonathan Ross described Groq's collaboration with the kingdom as a key early success in building its AI ecosystem.
Humane is to AI what Aramco is to oil. So Humane is becoming the AI entity for the kingdom. And there's a great analogy with oil here as well, which is when it comes to drilling wells, you sometimes succeed, you sometimes fail. And the best analogy with Groq is we're Prosperity 7. So famously, here in Saudi Arabia, there was Dammam 7, which is the lucky well number 7,
Correct.
where oil was found here
I
first.
visited it, yeah.
You did? Okay. And it's a very important site because that's where the oil boom came from. And what we've done with the kingdom, that's a little bit like, Prosperity 7 or Dammam 7, in the sense that that was the first success with AI. There were some other attempts. Now, Humane is going to be drilling other holes and seeing if there are other gushers.
Yeah.
But of course, you double down on the things that work, and so we're doubling down now.
Does Saudi Arabia have the talent to allow that to happen?
Absolutely. And one of the things that's important is there's different types of talent. So we've done deployments elsewhere in the world, and they weren't always as fast. There was some synergy in how we operated and how Aramco and the country operated, and it worked well together.
Yeah. There's been loads of discussions around national security and what could happen if these chips end up in the wrong hands, i.e. if some of those chips get transferred to China eventually. How have you navigated that?
Well, we had to get an export license from the United States Commerce Department in order to deploy here. And I have to thank the Commerce Department because they actually got it done on a holiday in the United States called Black Friday, which is the day after Thanksgiving. Yeah, even McDonald's is closed in the United States on Black Friday. And so we had to put in a lot of security precautions, and it's actually one of our most secure facilities.
That was Groq CEO Jonathan Ross speaking to me at FII here in Riyadh. A quick look at equity markets as we head towards the break. Things are leaning towards the red, though we did have really positive signals and a commentary around the President Trump-Xi meeting in the last few minutes. But coming up in the next hour, we'll be speaking to Sree Kochugovindan from Aberdeen Asset Management. Stay with us. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Presidents Trump and Xi wrap up their pivotal trade meeting in South Korea. It began with Trump calling his Chinese counterpart a very tough negotiator, but also a great leader, while Xi says he's ready to continue working with the U.S.
President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Treasury yields rise and the dollar drops after Fed Chair Jerome Powell warns that a December rate cut is not guaranteed.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Well, it's just gone 9 a.m. across the Emirates, 8 a.m. over here in Saudi Arabia. I'm Jumana Bersachi in Riyadh. Riyadh, if you're just joining us, a whole bunch of headlines coming through from President Trump's meeting with President Xi. We're going to get into them in a moment with Yvonne, but the basic takeaway, if you're just joining us, is that Trump has called it an outstanding and an amazing meeting. He's also said that he's going to be heading to China in April. It seems as though the two sides had a certain level of agreement on some of those key aspects vis-a-vis soybean purchases, on rare earths, but not necessarily on NVIDIA. So we'll get into that in a moment. The takeaway, though, a positive meeting. And of course, we're coming on back of that Fed meeting yesterday where they actually surprised in the sense that they cut interest rates by 25 basis points, but didn't really commit to December with them saying that, Fed Chair Jerome Powell saying that it's not necessarily a done deal. Regardless, what you saw was S&P and flattish, and actually some of the tech stocks continue to do well. Today we're slipping a little bit in trade, marginally so. We've got the Nasdaq down about 0.2%, but also paying close attention to some of the earnings that came through yesterday. Huge capex spending pipeline out of some of the big majors, Meta, Microsoft, and Alphabet, and a bit of a mixed reaction there. Meta and Microsoft leading declines in after hours. Two-year yields at 3.58. We have repriced the December meeting now, only 17 basis points worth of interest rate cuts coming through. The two-year yield moved up 8 basis points yesterday after the hawkish signaling from the Fed. And then Brent sitting at $64.6. Two things I want to flag to you that have come through in the past half hour. Number one, President Trump said oil was not discussed with China, so that's relevant. We don't know whether China has committed to anything vis-a-vis purchases of Russian oil. And number two, it seems like an attack on Ukraine infrastructure, energy infrastructure by Russia has also occurred in the last hour. So keeping a close eye on developments there and the impact that that could have on energy markets as we head into that OPEC Plus meeting this weekend. Okay, let's check in on how markets in Asia are faring with Winnie Su in Hong Kong. So much to digest, and I haven't even mentioned the Bank of Japan.
Yeah, exactly. It's a really busy, dynamic, and a very volatile day for Asia today. As you see right now on the screen, the MSCI Asia is slightly down to on the downside, but actually there was a lot of movement. We did see a bit of a downside when we didn't have that immediate readout from the Trump-Xi meeting, but afterwards you saw these headlines coming in, whether it's on the agreement around fentanyl or on rare earth. That helped the markets rebounded a little, and now we're back into a bit of a downside. So really, investors are digesting to understand what this meeting really means. So we are continuing to monitor further headlines to come. However, when you take a look at other indexes here, right, the Kospi also fluctuating slightly higher earlier after we had that Samsung earnings that beat estimate. So earnings season really still on the spotlight here, and we are seeing a bit of the upside when it comes to the AI theme. And like you just mentioned, we had that Bank of Japan decision, and they were keeping rates steady and didn't hint too much around when that next rate hike might come. So we are still watching what is going to happen at the presser later this afternoon. The topic is still on the upside here, while the yen remains quite flat-ish. Now we take a look at what's going on in the Chinese market, because again, that spotlight is on what's going on between the two countries, the U.S. and China. Yes, we've wrapped up that meeting, but still, we are still really trying to digest what these key trade deals are going to mean for markets. Hence, we are seeing markets earlier on in the green, but now slipping into the red. But I believe that we do have more details from Yvonne later.
Yeah, thank you so much, Winnie Su in Hong Kong. Okay, to our top story today. High-stakes negotiations in Busan, South Korea, between Presidents Trump and Xi have wrapped up with agreements on a number of topics, including fentanyl, soybeans, and rare earths. Let's go live to Busan now, and our China show anchor, Yvonne Man, who's been covering all of this the last couple of days. Well, it was always going to be a high-stakes meeting. President Trump said it was an outstanding and amazing one. What concessions or what form of an agreement have we got out of the two sides meeting?
Yeah, Jumana, you mentioned it. President Trump called this, if he had to rate it, a 12 out of 10 when it came to this meeting with President Xi that lasted an hour and 40 minutes. We were told that this could go up to 3 hours. So it was a solid negotiations there when it came to how long it took. But we're still trying to decipher exactly what was discussed, right? So at least from the U.S. side, this is what he put on Air Force One on the way back as he heads home to D.C. He talked about fentanyl tariffs, lowered to 10%. Also, when it came to rare earths, he mentioned no roadblocks on China rare earths. Jameson Greer, the U.S. trade representative, talking about China is not going to impose the rare earth controls. We're still getting we need some more clarity on that front here on what exactly the Chinese have agreed to as well. And soybean purchases, they said China is going to be continuing and resuming the buying U.S. soybeans now effective immediately there. When it came to what was less clear was when it came to the talk of chips. Now, he mentioned, President Trump, that they did talk about chips to Xi, and they will be talking more about U.S. chip exports in the medium term or in the future, but Blackwell chips from NVIDIA was not talked about. So that might be why we're seeing a bit of disappointment in these markets here right now when it came to whether China gets access to these high-end chips as well. Also, when it came to Taiwan, that was not discussed at all, according to President Trump as well. So certainly we're still figuring out, it seems like this was all good and a win for the U.S. side of things, but the big thing is we need to see the readouts from both sides and what China has actually agreed upon, because for one thing we're seeing right now, the one win could be lowering those tariffs to 10% on fentanyl. That could still leave China with 45% effective tariff rates, which is still higher than this part of the world. And you take a look at when it comes to this meeting, right? So Trump said that he will be meeting with Xi in April. At least that is helping the market anchor expectations that at least relations will remain stable for some time.
Yeah, pretty telling market reaction there in Asian stocks overnight, and maybe, as you say, in reference to chips, so the lack of clarity around whether China are going to get access to some of those chips. And I thought it was interesting that he deferred that decision to China. He said China are going to speak to NVIDIA. So one to watch. Yvonne, thank you so much for the brilliant reporting over the last couple of days. Yvonne Mann. Now, it was a mixed bag for U.S. tech majors in late trading after their earnings reports. Meta shares fell after it said it's raising spending on artificial intelligence. Microsoft also dropped as its results fell short of estimates. Alphabet, though, making gains on its earnings beat. For more, we're joined by Mandeep Singh, our global head of tech research at Bloomberg Intelligence. Mandeep, break it all down for us. I guess, from an investor's perspective, is it a good thing that these companies are announcing these huge capex spends, or are they getting a little nervous about the sheer size of money that's going into this space?
A little bit of both, but I would say, both Alphabet and Microsoft were very clear that there is a significant demand-supply mismatch, and demand far exceeds supply when it comes to the use of their cloud for some of these AI models. And look, in the case of Meta, I think the reaction was expected given their expenses are going up and they don't have a cloud business. And a lot of what they're talking about is involving, training of their models to catch up to OpenAI and other frontier models. So I can see the Meta side, but from a Microsoft perspective, the results were very strong. It's just an overreaction because there is, a reliance on OpenAI to consume up to $250 billion in compute over the next 4 years. So you've got a lot of concentration. At the same time, the use cases of AI are expanding. And so from that perspective, I think the demand signals are pretty clear that AI is getting deployed more and more across enterprises.
Yeah, it's interesting. I was speaking to the Groq CEO, Jonathan Ross, yesterday at the sidelines of FI. I put this exact same question to him, and he said pretty much what you just recounted now, which is that there shouldn't be concerns about overspending the space because demand keeps going up and up. But I just want to ask you about Meta specifically, because so far they don't have the consumer side of things on the cloud compute like the others do. And I just also think maybe that's one of the reasons that Meta fell more so than the others, because for them it's even more of a high stakes gamble to be spending so much on capex without necessarily the consumer facing side to back it up.
No, you're absolutely right. And look, from an AI perspective, the use case for AI in search has been far more successful than compared to social media. I mean, we are talking about AI-generated content on social media, but it hasn't really driven any engagement. Whereas on the search side, I mean, we know chatbots are something that consumers are using more and more. And Google actually saw an acceleration in their search revenue despite all the competition from ChatGPT. So clearly the search market is expanding. The AI infrastructure market is expanding. That's what is evident in Microsoft results and Google Cloud results. So really social media so far has not benefited. And in the case of Meta, they are building this superintelligence lab with the hope that they can find use cases that translate into revenue and they are able to show ROI down the line. But I don't know how long investors are willing to wait in the case of Meta.
Yeah, well, it's trading close to $700. I remember when it was back trading at 100 at one point when they announced the big investment in the metaverse. That feels like a really long time ago. Mandeep Singh, our global head of tech research at Bloomberg Intelligence. Thanks so much. Well, coming up, Fed Chair Jerome Powell warns investors a December rate cut is not certain. We'll hear the reaction from Aberdeen Investments' Sree Kochugovindan next. This is Bloomberg.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
That was Fed Chair Jerome Powell's warning to investors about the central bank's path in December yesterday at his post-decision press conference. Now, markets are taking cues from the Fed decision and also today's high-stakes meeting that took place between Presidents Trump and Xi. The readout, or at least what President Trump has said, was that it was an outstanding and an amazing meeting. So that's vis-a-vis that interaction. But of course, going back to the Fed, the 25 basis point cut is its second in a row. But for the first time in 6 years, there were both dissenters in both directions. So JP Morgan Asset Management head of global fixed income, Bob Michele, says Powell is losing his grip on the Fed.
I don't think it was at all surprising. The two dissents could have been a bit more interesting. I think Myron could have gone for 75 basis points. After all, he wanted 50 last time. Sure. So there's 25 that he's owed, plus another 50 this time. That would have been fun. And Schmidt, where was he last meeting? Where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier and inflation's not as much of a threat as we thought back in September, and suddenly he reemerges. To me, it tells me that Powell is losing his grip on the Fed.
Joining us now is Sree Kochugovindan, a senior research economist at Aberdeen Investments. You know, there's one line that caught the market's attention yesterday when Powell said a December cut is not a foregone conclusion. Far from it. Why did he need to emphasize the far from it, do you think?
I think there were a few hawkish signals in that meeting. First of all, that particular statement, exactly right. He did emphasize the fact that December is not a foregone conclusion. Second point is that the votes were actually reminded us of the positioning within the dots, the Fed's dot plot. There was a mix of views expressed within that dot plot. And finally, there's also that reference towards a neutral rate. Rather than sticking with 3%, it's within a range of 3 to 4%. So he's really signaling that he's knocking out the complacency within the market in a number of different ways there within that statement yesterday.
Okay, what do you think it will take for the Fed to stop with its normalization path, i.e. to stop their easing cycle?
Well, I think at the moment, we still have a 25 basis points penciled in for December. But our view is that then after that, they will pause. I mean, again, we are going to have to look through this data fog that we have. And I think given all the information that we have at the moment, he did mention the labor market weakness. It's not weakness that's going to accelerate. He mentioned that. But it is weakness at the moment. There is a softening there. So we're still in this risk management mode. So that still suggests that there is scope for a cut in December. For them to actually pause, I think some stabilization in the labour market, clarity from the labour market, but also this inflation trend. At the moment, they are signalling that the tariff-related price increases are temporary. They are willing to look through this. But I still think that if we think about December, we have the impact of the shutdown and the spillovers of that. The longer the shutdown is dragging on, the bigger the hit to GDP. So I think that's something, and consumption. So I think it's the labour market, but now the shutdown impact is also going to start filtering through. So it does seem that December is still highly likely, but the fact that there is a dissent, that dissent there really, I think, reflects the inflation outlook. It'll be interesting to see the minutes from this particular meeting. That will be quite key. But it does seem that, to your question, I think the inflation dynamics there, if we start to see a pickup in inflation expectations, for example, and if we start to see more meaningful resilience in inflation, that could be a deal breaker.
Okay, speaking of inflation, I also want to bring you lines from the Bank of Japan. We had the Bank of Japan overnight. They did not change the interest rate policy, though there was the 7-2 split. But this line also caught my attention there. CPI likely to decelerate below 2% in the first half of 2026. And of course, market participants have been anticipating a rate hike to come through from the Bank of Japan. How do you read the tea leaves this morning?
I think for me, my base case was for a January rate hike, and I've been holding that view since April. A few reasons there. We are seeing, I think, inflation, a lot of that inflation pressure in Japan has been food price related, and I think that's something that the BOJ are very conscious of. That's not something that a monetary policy can fix. It's a supply side issue. But if you look at the underlying core services, it's still relatively lackluster in Japan. They do need to see more of this wage negotiations passing through into realized wages, and then in turn passing through into services. And it is happening slowly. It is happening, but it's not happening at a pace where the Bank of Japan can, really drive ahead with rate hikes. So I think they have been making that message quite clear for a number of months now. I think within just the information that we have so far, we just have the rate decision. We have the fact that the inflation forecasts within the economic outlook are stable. They haven't changed. So I think there's nothing that can really shift my view in terms of a January hike from here, and very gradual from then on, by the way.
Well, what about the political backdrop to all of this? The new Prime Minister, Takeishi-san, coming in, and she seems to have had quite a constructive conversation with President Trump. How does that influence the way you think about fiscal policy and the impact that could have on the Bank of Japan's decision-making?
Yes, I think this month has been very turbulent for Japanese politics, but finally we have a coalition, a new coalition and a new prime minister. And I think what's interesting with Takeishi was initially the markets were very reserved about her policy stance. Some of the more radical elements that were mentioned earlier in the year, before this latest campaign, those policy measures, she's really toned those down. And so now it seems like we have a prime minister who is actually very conscious of fiscal easing and and the deficit as well. So she is wary of the bond markets. We have had bouts of JGB sell-offs, bond routes in Japan this year, a couple of bouts of failed auctions and turbulence. So they will be very conscious of that. And it's also interesting when it comes to foreign diplomacy, some of her more staunch right-wing policies have been toned down again. So if we start with the US, she was very critical of one element of the trade deal, which was the $550 billion investment package into the US. There have been a lot of different stories about what that actually means. From the Japanese side, it's equities, guarantees and loans. From the US side, they initially said that 90% of the profits go to the US firms. Now, she was critical of that, and possibly rightly so. What's happened this week is that she's come out with a new number of $400 billion of investments into the US, particularly with this mutual mandate of rare earth supply, critical mineral supply. So I think that's very interesting in how she has strategically shifted there. And I think that's a very positive sign for the markets.
Sree, I don't know if you've been following all of the headlines that have been crossing this morning after that President Trump and President Xi meeting, but what is your reaction to what we got in terms of, the amazing meeting, that's a quote, that Trump seems to have had with his counterpart? Is this a truce, or do you think the precursor to perhaps a more extended trade deal?
I think for now there is a truce, and this is a pattern that we've been seeing for a number of months now. We have an acceleration in tensions and then a truce, a pause, whether it's a deadline. Now it's a pause from the China side in terms of the exports of export deadline for rare earths. So that's all good news for the markets for now. But I think that there's still, in terms of detail, we're still, in the dark a bit from an investor perspective. This is good news for now, but this is still an ongoing process where we're not sure exactly what, how the fentanyl deal is going to progress. Yes, you can sort of try and stop certain aspects of it, but there's still a lack of detail there. And it's great that he's come out with some good photo opportunities, but I think the market will be looking for detail going into the coming months. But for now, I think a bit of relief, at least, that we're not going to see very high tariffs immediately.
Yeah, and also we're waiting for the readout from China's side about this meeting. We've only heard from President Trump so far.
Exactly.
Sree Kochugovindan, Senior Research Economist at Aberdeen Investments. Always good to chat to you. Thank you so much. Well, coming up, making history. Namibia repays its $750 million eurobond in one day. More details later. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. Well, we're just getting the earnings come through from Societe Generale. Let me bring them to you. Third quarter net income is a beat, 1.52 billion versus estimates of 1.31 billion. In terms of net banking income, also a beat, 6.66 billion versus 6.57 billion estimates. Operating expenses also slower than the estimates as well. Still see the full year return on tangible equity at around 9%. And coming up, we're going to be speaking to Ooredoo Group, who have reported revenue for the third quarter that beats estimates. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Presidents Trump and Xi wrap up their pivotal trade meeting in South Korea. The talks yielding agreements on a number of topics, including fentanyl, soybeans, and rare earths. Treasury yields rise and the dollar drops after Fed Chair Jerome Powell warns that a December rate cut is not guaranteed.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Well, it's just gone 9:30 a.m. across the Emirates, 8:30 here in Saudi Arabia. I'm Joanna Versace in Riyadh for the fourth time this week. Let's get you up to speed on markets. Two major developments overnight. Let me just start with the big meeting between Xi and Trump. It seems to have gone well. They seem to have reached an agreement on certain topics per President Trump. We still haven't got the readout from China, but essentially positive talks there. Some agreement on fentanyl, on soybean purchases, on rare earths. So some of those key topics, those discussions have gone constructively. We also had the Fed meeting yesterday. They did cut interest rates by 25 basis points as expected, but said that December was not a done deal. So a bit of a hawkish cut coming through there. The reaction in equities, almost a muted close yesterday, positive close for NASDAQ today. We've been seesawing in future space, but right now what we have is both the S&P and NASDAQ futures leaning towards a more positive reading out of the President Xi Trump conversation, in addition to some of the signals coming through perhaps on the tech space as well. So keep an eye on that as we continue throughout the U.S. earnings season. Two-year yields 3.58 now. We moved up 7 basis points yesterday. There's only about 17 basis points of a rate cut priced in for this upcoming meeting in December. And then Brent also down 0.5% this morning. President Trump saying that oil was not discussed with China when he met with President Xi. So interesting there because, of course, China continue to buy Russian oil. That did not come up in their conversation per what he said to reporters. Now let's move on to more earnings, this time out of the region. Ooredoo Group has reported revenue for the third quarter that beats the average analyst estimates. The group posted net income for the nine-month period of 3.09 billion riyals. The Qatari telecommunications giant also says it has updated its dividend policy to reflect a new target payout ratio range of 50% to 70% of normalized net profit. Joining us now is Aziz Aluthman Fakhroo, Ooredoo Group CEO. Really good to have you with us, sir. Thank you for joining our show today. It sounds like it was quite a positive, constructive quarter. Just talk us through some of the dynamics and where the growth momentum is coming from.
Thank you, Jumana. Look, it's not just been a quarter. I think it's 4 years in a row. Second year in a row now we have record years for the history of the group. And the first 9 months of this year are no exception to this. We've managed to grow our top line by a full 3%, expand our EBITDA margin at 44%, and increase our bottom line by 6%. And just a caveat, this year we're taking a 15% provision for the Pillar 2 tax, which we didn't have last year. So if you adjusted it for that, our net income would have grown actually 12% year on year. I think that's a testament to our focus, our discipline, and our portfolio mix between mature cash-generating markets in the GCC and very high-growth markets such as Iraq, Algeria, and Tunisia, which have double-digit growth. And another testament is the confidence of the board. As you mentioned, we've been increasing our dividend by nearly 160% over the last 4 years. We've been at the top of our payout ratio, and the board has changed the payout ratio, now going to 50 to 70% of normalized profits. So it shows their confidence in our momentum and trajectory.
I did want to ask you about the increase in the dividend payout, because also I'm assuming that you are going to have big R&D spends, big capex spends coming up in the next few years. So why did it make sense now to increase the percentage of your dividend payout?
Look, we're one of the best free cash flow generating telco around the world. I think we're in the top quartile. We've been able to organically delever our balance sheet from 2 times net debt to EBITDA. Right now, we're at 0.6 times net debt to EBITDA. I think we have one of the strongest balance sheets in the industry. We've been very, very disciplined on the telco sides in terms of capex to sales ratio. We're always sub 16%. And we are investing a lot. We've committed $1 billion in data center expansion, $500 million in international connectivity with sea cable. Despite that, we're still delevering. And I think, you know, one of our commitment is shareholder returns and shareholder value creation. And we've been at the top of our payout ratio for the last 3 years, despite all these investments and that growth. So it's only logical that we increase our range.
Yeah, talk to me about the data center ambitions and the build out there. Obviously hugely topical for the market. Ultimately, how much do you see this contributing to the bottom line of the business? Because right now, of course, you're still very much in investment phase.
Yeah, today we have a relatively small operation in terms of data centers when you look at the huge announcement in the US, etc. But we are a market leader within our footprint with around 66% of installed capacity. Just this year, we've managed to increase, just by expanding existing facilities, our installed capacity in Qatar by around 25%. We have a committed target of growing our full installed capacity to above 120 megawatts in the next 3 to 4 years. There are long-term projects, as you know. There's around 18 to 24 months build out, depending on the projects. But the stated goal as a digital infrastructure company is by 2030 to have at least 25% of our EBITDA coming from the infrastructure stack. This is not just data centers, it's in the data centers, towers, and undersea cables and connectivity, because people focus a lot on the data centers. They tend to forget that they need to be connected between each other, and 90% of the data between Europe and Asia flows through this region, and we have an exceptional footprint to leverage that growth.
Yeah, interesting. I'm going to pick you up on that, but let me just ask you one question. Do you have access to all the chips that you need that are necessary for the build-out of these data centers?
We were the first telco in the region to be an NCP. We announced that close over a year ago. And an NCP is an NVIDIA cloud partner. So we have priority access to the chips. We've actually deployed chips today in Qatar. We're deploying them in Kuwait, in Oman, and in Tunisia. This doesn't just focus on Qatar, it focuses on all our footprint. Indonesia, our subsidiary in Indonesia, IOH, is actually leading. I think they were the first telco in Asia to deploy the GB200 chips nearly 5 months ago. So we are investing and deploying AI for our customer at the fastest speed we can.
Yeah, and just quickly, because you mentioned this, talk to me about the importance of the undersea connectivity and what you're doing in that space.
So, as I mentioned, 90% of the world's, of Europe to Asia's connectivity flows through the region. There hasn't been many significant investment in undersea connectivity through the region in the past 5-6 years. You know all the problem of saturation and security you have at the Suez Canal and the Strait of Hormuz. Given our footprint operating in Oman and Iraq, we're laying FIG, which is the first cable which will connect Oman to Iraq, flow through Iraq directly into Turkey and connecting to the Mediterranean. This will be the first cable connecting Asia to Europe, which circumvents the Suez Canal and the Hormuz Strait. The demand we have on that is extremely significant because of its speed, resilience, but also security benefits.
Yeah, so interesting. Mr. Aziz Aluthman Fakhroo, thank you so much for joining us today on the show. Ooredoo Group CEO.
Thank you.
Now, former U.S. Federal Reserve Vice Chair Brainard says she remains confident the U.S. inflation rate won't reach 4%. Despite the impact of tariffs. Speaking to Bloomberg's Haslinda Amin at Barclays' 19th Annual Asia Forum in Singapore, Brainard says she's increasingly concerned about the future of the Fed's independence.
Certainly, he followed through on the rate cut in October that was essentially promised in September, but then held the line. And I think that was reflecting what he called, very big diversity of views in the room. Of course, we saw that in September with 9 of 19 participants showing that they wanted to hold the line at 2 cuts or fewer. And so he alluded to the diversity of views around the table. We saw a dissent both on the hawkish side and the dovish side this time. And so going into December, he has a lot more challenges in terms of managing his committee if he does want to guide towards an additional cut in December.
Dr. Brainard, is there a new inflation target now? I mean, they've been looking at 2% for a very long time. That is not even close to being achieved. Is 3% it?
Well, it is true that inflation now has been running well above 2% for the past 4 years. It's at 3%. It is going in the wrong direction. And the projections the committee put out in September didn't have inflation returning to 2% until 2028. So that's, I think, why we're seeing the hawks on the committee digging in a little bit. The Fed has been committed to a 2% target, I think, for keeping inflation expectations anchored. It is absolutely critical that they show their resolve to get inflation back to 2%.
Never mind that we're talking about those trade talks and a possibility of a trade deal today or tomorrow for that matter. Trajectory, when it comes to the trajectory of the tariffs, that's inflationary. Might that eventually play out in 2026? Might we see inflation at 4%? Is that a possibility at all?
It seems very unlikely. It does seem that a lot of businesses had pre-positioned, so they softened the impact of the tariffs. It gave them time to adjust supply chains. And it does seem that the impact of the tariffs is working its way into the price level gradually. So I do believe that we will see somewhat higher inflation than we would have otherwise, but I don't expect it to get to 4% or higher.
Fed independence is the other thing that markets are focused on. When you take a look at the 5 shortlisted men to take over from Jerome Powell, are you still concerned about Fed independence?
So I am concerned very much about Fed independence, and that is because this White House has done unprecedented things that really do potentially undermine the independence of the Federal Reserve. And in particular, while presidents always want lower rates, and always, many presidents, not all, talk about wanting lower rates, nobody has ever announced that they're firing a board governor, unprecedented, without any due process, and also put a member on the Board of Governors who remains on the staff of the Executive Office of the President. Those are unprecedented, and I think everybody should be worried about Fed independence.
So when you take a look at the 5 possible candidates, I mean, is there a sense that, they could counter the pressure from the government?
So I think all the people that I'm aware of that are on that list, highly qualified, but the real question is how independent can they be of the president? And that will be very important for investor perceptions and public confidence in low inflation.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Riyadh. Namibia has repaid its $750 million Eurobond, the largest single-day debt maturity in the Southwest African nation's history. Finance Minister Erika Shafuda says the redemption will enhance Namibia's creditworthiness and standing in global capital markets. Our Chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Jen, what more details do we know about this?
Right, Jumana, we're getting some positive signals, at least from analysts that we've spoken to. And we had been anticipating this in slight because the finance minister over the past few months in Namibia had been alluding to the fact that they were trying to at least tap the domestic markets just because we're seeing spreads a bit too wide internationally. And so, yes, as you mentioned, this is historic for the country. They used a sinking fund, about $444 million in order to pay this off. And from what we've heard from some of the readouts from analysts, they are saying it is positive. It does send a signal to investors that Namibia is a creditworthy borrower. But still, there's a bit of caution because they just insert a bit of caution because if we don't, in fact, see growth pick up and investment pick up, then there could be a bit of doubt on the horizon for Namibia. But this still is significant for the country as they continue to bounce back after the pandemic recovery that they had seen.
And a positive step, how far along will that go in terms of allowing them to secure more FDI, a clear focus as well?
Well, exactly. And if you speak to the president, Ndatiwa, she has made that a priority since she came into office earlier this year. A number of times I've heard her speak. She says that the country really is full of richness because they are looking to be a major oil and gas exporter. They also are the world's 3rd biggest uranium producer and hoping to also be a massive player in the green hydrogen space. And we have seen a number of investments and projects over the past few months actually targeting some of these sectors, including BP and Total, which have done their own offshore oil explorations. And so, yes, there is quite a bit of investment that the country is now seeing, especially if you think of the decline that we had seen in Namibia over the past few years. But still, there's still a bit of ways to go. If you look at some of the IMF projections, they actually say that the country may only grow this year just over 3%. So still, they're trying to work their way back, but they have quite a bit of arsenal if you take a look at what a lot of big players are trying to invest in and what they are hoping to get more and more capital coming in.
Jen, thank you so much. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Well, Investcorp CIO and Vice Chairman Rishi Kapoor has highlighted the Middle East's growing role as a destination for global investment. Kapoor also noted opportunities in Saudi Arabia's private credit markets.
If there is excess in a system, it is not surprising that there's going to be a marginal player entering the system, perhaps not quite as institutionalized as others. The benefit we have at Investcorp, to be frank with you, is we've been in this business for over 4 decades, right, in private markets investing. We have a very large private credit platform on a transatlantic basis. Our DNA is really built around credit prudence, discipline, thoughtful underwriting, and knowing what we are lending to. Yeah. There is no substitute for that, Shumana. I mean, so if the effort over here was to throw capital behind a rising tide, will that result in some disappointment? The answer is yes. But for most of the established institutionalized players, like Investcorp and others, this is much more about making the right credit decisions.
How do you see the private credit opportunity here in Saudi Arabia?
I think it's part and parcel of the overarching economic diversification agenda, and it's an important feedstock into that. So if you had to quantify one of the biggest opportunities for growth within the private markets ecosystem here in the region, including Saudi Arabia, I would say private credit and infrastructure are top of that list, right? Because they are natural drivers of the broader economic diversification that the leadership is seeking.
And how does that translate or channel to the kingdom's drive to bring in more FDI?
It's, again, very heavily interlinked. You will inevitably always have the first participants in a new financial product in a market or a region like the GCC or KSA be the local player, because they understand the market the best, right?
Yeah.
But that, in turn, that participation, that vote of confidence, if you will, from the local investors, the domestic investors, in turn engenders comfort by the international community. So it is going to go hand in hand. I think we are going to have increasing local participation in private market assets, particularly private credit in the region, and the market is going to grow. And behind that, we are going to have foreign investor participation.
What about the opportunity set in infrastructure? I was just having a conversation now with the JLL CEO. There's a lot of focus on data center build out. I would think that infrastructure actually is a good fit for PE firms, especially, you're talking about long duration assets, hard assets. Where does it fit into your portfolio?
I mean, you read our minds, Jumana. This infrastructure, not just in the region, by the way, globally, we think is probably one of the asset classes within overall private markets with the strongest tailwind. In the region, of course, there is a big focus on digital infrastructure, understandably. But that's not all. There's the energy infrastructure, both the new build as well as the private capital participation in existing energy infrastructure. There is the transportation and logistics, because the region is a big hub for logistics. And finally, there's the social infrastructure, the schools, the hospitals, and so on.
The European Central Bank is expected to keep rates unchanged for a third meeting today. That's as it waits for year-end projections for greater clarity on harm caused by trade tensions and, of course, the French fiscal crisis. So joining us now is Ven Ram from our Bloomberg MLive team. Ven, not expected to cut interest rates this meeting or any upcoming meeting. What are we looking out for today in terms of surprises?
Yeah, I think in terms of surprises, what the ECB can do is throw a hawkish surprise. In the previous meeting, they had said that they would take a path-dependent, data-dependent, meeting-by-meeting approach to deciding on interest rates. And if they kind of say that if they remove that line, I think that will be hawkish. And why would they remove that line? Because, as you know, Germany has introduced fiscal spending higher, has outlined higher fiscal spending, and growth for the third quarter is expected to come later today at 0.1%. The ECB was expecting growth to, in fact, stagnate for the third quarter. So if the indications on the horizon are that, look, growth is going to improve, and there are suggestions that inflation may pick up during the second half of 2026, and if that happens, then the ECB is likely to want to remove the optionality of still being able to cut rates. At the current point of 2%, the ECB's policy rate is exactly at the midpoint of its nominal neutral rate. So I don't think if they remove that optionality to cut rates one more time, I think that will be a hawkish surprise for the markets.
And Ven, I've got about 1 minute here, but let me ask you, given the more hawkish cut that came through from the Fed yesterday, could that exert some downward pressure on the euro here?
Well, I think that the dollar is anyway on a comeback, Jumana, because if you look at what happened to the dollar during the first half of the year, there was a remarkable risk premium built into the dollar. At one point on April 21, specifically on my model, the dollar was some 6% undervalued. Now that gap has completely closed, meaning that the dollar is moving exactly in line with fundamentals and real inflation-adjusted interest rate differentials, if you will. So I think that, you know, with the dollar behaving more or less in line with fundamentals, I would expect it to continue to appreciate.
Okay, the comeback kid, you heard it here first. Van Ram from our Bloomberg MLive team, thank you so much for the preview into ECB. Well, that is it for Horizons Middle East and Africa. It also wraps up the 4 days of programming we've had in Riyadh. Hopefully you've enjoyed it. I'll be back in Dubai tomorrow. Stay with us for Daybreak Europe. This is Bloomberg.